U.S. Bank Economic 360, an appropriate topic for the new year, trends. It's a word commonly associated with the market. U.S. Bank Business Vice President and Senior Portfolio Manager Mike Denneman joins Business Watch producer Kelly Leon in the studio with a look back at the trends that shaped 2014 and what we may expect in 2015. Mike, Kelly.
Thanks, Allie. It's great to have you with us, by the way. Happy New Year.
Happy New Year. Good morning.
So, prominent themes.
Sure.
From last year. Let's start with that.
Sure. So it was a pretty good year for the market, but it certainly wasn't a smooth one. We had some record highs in there, but we also had some sharp declines too. Yeah. And a lot of that had to do with the themes and the trends that played out over the course of the year. Most recently, we had oil, of course, has been at the forefront of everybody's mind.
Yeah, very noticeable.
Very noticeable. But throughout the course of the year, there were, the Fed and higher rates were on the forefront of everybody's minds. We had worries about economic slowdowns overseas with Europe and China. There were concerns about, what's going to happen with the Ebola, with Ukraine, all of these geopolitical stories out there. And of course, we had a pretty significant election here at home. So all of those played into it. And then we also had trends within the market itself. Mm-hmm. There were quite a bit of mergers and acquisitions, quite a number of initial public offerings. We all learned what corporate inversions were. So all of this played into it. And again, it was an up and down year, but we finished on an upswing. So that's the good news.
That's good news. So looking into the crystal ball, what is going to stay the same in 2015?
Well, at least initially, something I mentioned just a minute ago, initial public offerings, I think that's a trend that we'll continue to see in the new year. Again, an IPO is when a privately owned company sells shares of its stock on the exchange for the first time. So 2014 was a banner year for IPOs, the most in more than a decade. So that's really no surprise. If you are the owner of a privately held company, you want to maximize your value, so you're more likely to issue shares when the market's doing well. And as we closed out 2014 at near record levels, I think that will only encourage more IPOs for 2015. We're already starting to hear rumblings of high-profile names like Uber that are anxious to come to market.
Yeah, and what about differences? What are we going to notice?
Sure, I think probably the biggest difference is going to be with the Fed and interest rates. So the Federal Reserve has been sitting on the sidelines for the large part the last several years. From the financial crisis on, we've been having these very low interest rates, and the Fed has been reluctant to raise those. They don't want to upset the economy. But as we moved into 2000 and through 2014, the economy's picked up. There's become a lot of pressure on the Fed to do something. To this point, they haven't. Yeah. There's a lot of debate about whether that's a wise move or not, but I think that pressure has reached a point that they can't defer any longer, so that as we move into 2015, we probably see some action from the Fed. And that is a real departure from their prior policy, which has been, again, this extended period of low interest rates. So there are a lot of opinions about what that will mean for the market, but I think one thing we can count on is the Fed pushing those rates a little higher.
Okay, sounds good. And we can also count on U.S. Bank giving us great advice. So
absolutely.
We thank you for that, and we wish you a happy new year.
Thanks, Kelly.
All right.